Okay, so today we're going deep on Bill Ackman,
That's good.
an investor who not only made it through the 2008 financial crisis, but actually well thrived.
Yeah, he did pretty well.
Like really well. We're talking turning $60 million into $1.6 billion, while like most people were losing their shirts.
That's right. And, it's a story that shows how important it is to see opportunity when others are seeing only risk.
For sure, for
Yeah.
sure. And the source material we'll be looking at today is an article called How Bill Ackman Made $1.06 While Everyone Else Went Broke.
Right.
And just to set the stage, can you paint a picture of what was going on in 2008?
Well, back then, it was just pure panic. I mean, think Lehman Brothers going onto the stock market, just crash, a complete financial meltdown.
Yeah, it was a scary time.
It was people lost a lot of money and, everyone was just terrified.
And that's where Ackman and his firm Pershing Square come in.
Yeah, right in the middle of all that.
So what was his approach then? Was he like everyone else?
Not at all. Actually, he was known for being a contrarian investor. I mean, he didn't follow the trends. He looked for companies that were undervalued, had good fundamentals, ones that people weren't excited about, but had the potential to make a comeback.
So while everyone else was running for the hills, Ackman was like buying up all the bargains.
Exactly. He saw a sale and, he took advantage of it.
And the perfect example of this is his investment in General Growth Properties.
GGP, right? The mall company.
I remember how bad things were for malls back then.
Oh, yeah. They were struggling big time. And GGP's stock price, it dropped to just 34 cents a share.
Wow.
Most people saw a dying industry, but Ackman saw something different. He did his research and he saw an opportunity.
But it couldn't have been easy to invest in a company when their stock was practically worthless. I mean, what made him so confident?
Well, Ackman saw that GGP owned some really valuable real estate malls in great locations that, even though things were tough, still had a lot of worth. He thought that with the right management and some strategic changes, the company could recover.
So he bet big on a company that everyone else had given up on.
He did. He put $60 million into GGP, and it turned into a $3 billion investment. That's a huge return.
That's incredible. But Ackman isn't just your average investor. He's also known as an activist investor.
That's right. He doesn't just buy stock and sit back. He gets involved. He pushes for changes in the companies he invests in.
Sometimes I've heard he can be pretty aggressive about it.
He can be when he needs to be. But he does it to increase the value for shareholders.
But don't some people criticize activist investors for being too focused on short-term profits?
They do, and Ackman's had his fair share of that criticism.
Okay.
But to be fair, he often does much more than just financial maneuvering. He fights for changes in leadership, better operations, even mergers and acquisitions.
So it's about seeing the long-term potential and not being afraid to shake things up to get there, which takes a certain personality type, I guess.
It does, especially when you're going up against CEOs and boards who don't always like what you're doing.
Right.
Ackman is known for his strong convictions and his ability to stay calm when things get intense. He's not afraid to write strongly worded letters to the public, rally other shareholders, or even get into public fights with company leaders.
Sounds like he doesn't back down from a challenge.
He doesn't. But it's not just stubbornness. He has a clear set of investment principles that he follows.
Like what?
Well, he looks for companies with moats, which are strong competitive advantages that set them apart from their competitors. He's also a long-term thinker, and he likes to invest in disruptive technologies. And he's very careful about using too much leverage or borrowing money.
And he's got some good advice for everyday investors too, right?
Yeah, even though most people aren't dealing with billions of dollars, his advice is solid.
Yeah.
He says things like, don't borrow against your investments, only put money in what you understand, diversify your portfolio, and be patient. Think long term.
Pretty sound advice, even if you're not managing a hedge fund.
Definitely, Ackman's story really highlights how to navigate financial crises and find opportunities when things are chaotic.
He wasn't just lucky. He did his homework,
Yeah,
trusted his instincts, and stayed focused when everyone else was losing their heads.
exactly. And that's a key takeaway for everyone listening.
For sure.
The ability to think for yourself, do your research, and have the courage to stick with your beliefs, especially when times are tough.
So if chaos can create opportunity, like Ackman's story shows us, how can we learn to see potential where others only see risk?
It all starts with being curious and thinking critically. Don't just follow the crowd. Question everything, challenge conventional wisdom, and look for different perspectives. And most importantly, do your research and analysis so you can make informed decisions.
Great advice. And even if you don't plan on becoming the next Bill Ackman, understanding his methods can help you make better financial decisions no matter what.
Absolutely.
Okay, that's our deep dive on Bill Ackman. Thanks for listening.
My pleasure.
We'll see you next time.
See you then.